Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the markets. That is the crypto market, the major stock market, what other markets we're talking about? We're talking about NFTs, we're talking about metals, we're talking about some serious things going on in the world too. We've got a lot of tension going on in Iran at the moment. That looks like it is heightening. So that'll be one of the main headlines we'll discuss today, as well as we'll be talking Base on the crypto side, announcing its move away from Superchain to build its own L2. And on the AI side, OpenAI announces EVM Bench, a new benchmark which measures how well AI agents can fix smart contract vulnerabilities. So we will be talking about those important headlines, and we'll be talking market thoughts as usual. Can't wait to get into it today. I've got Legendary in the co-host seat with me as usual. We are ready to get into it. Just a reminder, friends, before we do, nothing that we say here is financial advice. The market is very, very risky. We do not know anything for sure. So please do proceed with caution and exercise your own judgment at all times. With that out of the way, Legendary, it is Thursday. It is the 19th of February. How are you doing? How are you feeling?
GM Jim doing quite well. Quite excited because of the call that we had before the show on the things that we want to do this year and where we are going with the show with the company behind it. And I mean, I don't know what we can say at this point, but I'm just hyped. I'm excited for what is to come. B, you are muted.
I am also excited for what is to come. I think we can't say much now, but I just think a lot of companies in crypto will need to grow up a little bit. And I think we'll need to be, I think you're going to need to be creative during downturns, no matter how well you've done. If you want the business to be well and do well, you're going to have to get a bit creative during the downturn. I think you're going to have to build stronger relationships, but you're also going to have to expand out. And I think just doing one thing over and over and over in this industry does not work. And also, Ledge, I don't know, I've been thinking about this more generally. Maybe if you think about tech companies as well, I think there's a story recently, I might be completely making this up, but say you're a founder doing something in one particular vertical and someone comes in to buy you now, for example, how would you really be confident to say no to something like that when the tech now, everyone feels so empowered to be able to go and build almost anything at the moment? And so I feel like you need to really continue to be on the move, like keep pushing forward, keep staying on the move, unless you have some very sticky kind of human business. But if you're on the tech side, say you were one of these model providers, model producers, or whatever. Someone tries to buy you, you have to say yes, like ASAP, because you could be you could be irrelevant in 2 weeks' time trying to go it alone. I don't think it's like that for us in the media side because we have human connections, human relationships, and you know it. Therefore, I don't know if it's exactly the same, but just curious what you think on that idea. You are also a mute now.
Great. Probably right. If you're not on the side of being confident you're going to achieve AGI with whatever it is that you are doing, and someone wants to buy you out at a reasonable price and valuation, that's not a bad idea. And we've been talking to some consultancies around the AI B2B software as a service space, and they said, yes, you obviously have companies like AppLovin, et cetera, being down massively, but you have companies that are requiring some sort of certificates and certified this and that processes, and that can't be automated yet because these AIs don't have these certifications yet, and hence these stocks like still have some value or some significance. And I was thinking, this is just a race against time. Like, if your AI needs to have some sort of medical certification or legal certification, whatever it is, or accounting certification, the models will have it at some point, and you're still not wise to bet against this trend. So I did not agree with that person's take that stocks in the software as a service industry that have some sort of certification tied to it are like immune right now to whatever's going on with AI. They will be sell targets at some point, and this is why I agree with you. If you are building something there and get a reasonable offer, best to take it, be on the move, and then do something else. And maybe linking to that, there was this interesting post yesterday. Let me prep it before we get it up on screen, by Anthropic. And they published some Anthropic research to have a look at, well, how the models are being used, specifically Claude Code, that was all on autonomous agents. And the interesting one, linking, I mean, all of it is interesting, but the one part linking to our discussion is this chart, which is asking the question, in what domains are agents deployed? Software engineering has 50% of the AI deployments. And if you look at stuff like legal, 0.9%, medicine and healthcare, 1%, e-commerce and operations, 1.3%. So basically, out of 100 agents, only one does legal work. Out of 100 agents, only one does something to do with medicine and healthcare. Out of 100 agents, 3 do some sort of academic research. And out of 100 agents, 50 do software engineering, which means in all these other domains, the agentic progress is holding back at the moment. It's not generally used by people, but I do believe this will change very, very rapidly. And this is measured, by the way, as a percentage of tool calls. So what tools are being called by Claude Code, by people who are doing whatever they're doing with their agents. And as this will accelerate, your thesis of you having to rotate if you build something and do something else will be validated more and more and more.
Okay. That's pretty cool. That's pretty cool. Yeah, I think, I don't know. I just think everyone's in a bit of a frenzy at the moment as people try to figure out what direction to go. You started this conversation thinking about our business, and I think we do need to evolve, but that's more coming to a natural point where we've been very public facing for a while. I think there's some stuff we can do on the B2B side. So that's a bit more of an evolution. I don't think we're getting disrupted by all this tech, which is kind of obviously having a field day with the SaaS companies at the moment. But it's interesting to think about. It's interesting to think about. I hope that everyone here is on the journey with us for that, because it's going to be cool. We'll be documenting obviously some of our moves as we progress through the year. I think it'll be good. It's very, very exciting, and it's just got to keep moving forward anyway. So it's fun. We will keep you in the loop as always, but let's get you into the loop for what you need to know from the past 24 hours on the market, because there are going to be interesting conversations today, but we're going to start with the price action, which is not necessarily too headline making, just getting you up to speed. Bitcoin is down another percent. Maybe doesn't look very nice to say or hear very nice. It's 66.5K, down 1.5%. ETH down similar amount to 1950. XRP is down almost 4% to $1.40. Sol is down 2% to 81. Hype is down a couple of percent to 28. On the meme coin side of things, we have Doge down a couple of percent. Guys, I'm really, really convinced of this idea that I'm having at the moment, where these memes are bottoming out. They're moving no more than the majors. Bitcoin down 1.5%, Doge down 2%. Pepe's down 3% when ETH is down 2%. Pump, on the other hand, is down almost 8%, back to 2 bill FDV. Pippin is down 14% because that is a wild token. Pengu is down 6% as well. And SPX is down 8%. I think it moved up a lot yesterday, SPX. So that was up 12% yesterday. So we've got some volatility on the meme coin side. And in terms of the headlines we're going to be talking about today, first we're going to go into the heightened threats around the US strike on Iran. Hasn't happened yet. That is what is being suggested. Polymarket odds obviously went quite high yesterday, or moved much higher than they were. And that is what is being suggested. Remember, when we talk about these things, Ledger will go into that in a bit. We're only going to be talking about it to the extent that it affects the market. That is the crucial part that we are trying to ascertain. And we'll try to get you the core information that you need there. And then Base has announced it's moving away from Superchain to build its own L2. Optimism token crashed 23% as a consequence. Obviously, Base had been building on, or it was part of the Superchain and part of the Superchain ecosystem before, which was built out by Optimism. A lot of their fees went back to Optimism, so we'll talk on that. And finally, OpenAI announces EVM Bench, a new benchmark which measures how well AI agents can fix smart contract vulnerability. So we're going across the board here, a bit of macro, bit of crypto, bit of AI. That's the nice split. We'll also talk Bitwise filing for, well, we'll just get you up to speed with Bitwise filing for prediction market-backed ETFs under brand name Prediction Shares. Hyperliquid announces a 1 million hype contribution towards Hyperliquid Policy Center to represent Hyperliquid in Washington, D.C. I do think that is very important. I think that might actually be a bit foreboding, actually, because I don't think one of the bear cases for hype, I've shared this bear thesis for a long time, is that you will have to bet. If you had to be a betting person, there is no way that you think all of these centralized exchanges who have had to comply with all kinds of regulations. CZ literally went to jail because they didn't comply with regulations, and yet hype has kind of come in. No KYC, no nothing, just take everyone's market share. Do not think that CEOs would let that happen. If I was CEO of an exchange, I wouldn't let that happen. It doesn't feel very fair to me, even though I love hype as a product. Just telling you from the legal perspective what my thinking would be. Polymarket announces you can now sponsor market rewards to entice the liquidity for the size you want to trade. I think that is interesting. Sports-focused prediction market Novig announces a $75 million Series B round led by Pantera Capital. Gosh, there's so much money going into prediction markets right now. That is clearly, we talk about trends to, or waves to ride. If you can figure out a proper way to ride the prediction market wave, that would be fantastic, because you don't necessarily just want to bet and lose all your money. But that is clearly a wave here. Robinhood announces L2 testnet has 4 million transactions in its first week. Lending firm Ledden reveals selling of $188 million of bonds secured by Bitcoin. That is interesting. Moonwell announces $1.78 million protocol loss due to wrongly authored Claude code, which I think is horrific. Cannot just let your code write the contracts for your financial platforms. That is not acceptable without checking it with a human. World Markets beta launches on Mega ETH. Is the first unified spot, under collateralized lending, and perps platform all combined. So I am kind of interested in that. I want to try to check it out. And finally, Gigaverse announces Gigabit, a proprietary currency designed for the Gigaverse game. A good friend of the show, Dith, has been cooking there, building a great game with Gigaverse, great IP also. And I'm intrigued. I did read the article briefly. I want to double down on his approach to an in-game currency, because he's very, very smart, and I want to know what he has been, where he landed there. But that is the news to get you up to with everything you need to know from the past 24 hours. We've got some interesting stuff to discuss. As always, we'll get into the headlines in a bit. But before we get there, Ledge, what is catching your attention, either from the snapshot or from around the space, that you think we need to discuss?
It is the Bitwise news that caught my attention. So how is an ETF working that has a prediction market tied into it? And this is the answer to that. Bitwise's lineup includes 3 election cycles. There is the 2028 presidential race, the Senate midterms, the House midterms, both of them being in 2026. For each race, there's 2 separate funds. One is paying out if a Democrat wins, and the other one is paying out if a Republican wins. And there is an equivalent of 6 funds with this identical structural logic. And each fund invests at least 80% of its net assets in binary event contracts trading on CFTC regulated exchanges. These contracts settle at $1 if the specified outcome occurs, and 0 if it does not. So basically, what it means, you can now buy an ETF that loses all of its value if you're betting on a Republican to win the presidential election 2028, or is making money if you're betting on a Republican Republicans winning and the Republicans win. And as I said, if you're betting on Republicans and Dems win, then you lose all of your money. So basically, what it is an ETF wrapper for a prediction market. So you don't have to go to Cauchy, Polymarket, to the CFTC regulated exchange and do your political predicting there. You can do that directly within your brokerage account and do it this way, which is interesting because it is exactly the other way around of how we are thinking in Web3, because we like to tokenize and wrap things for them to be on-chain. We like to have on-chain gold. We like to have on-chain equities with all of the equity perps. And this is the other way of thinking. This is, okay, we're taking a prediction market. I know not all of them live on chain, but a lot of them do. And how can we wrap that in a product that is an ETF, so I can buy, 5K worth of Republican winning the Senate or House midterms ETFs and either be up or lose all of my money if that does not happen.
Very, very interesting. Did you see this other news? So yeah, this prediction ETF thing is interesting. Also, we talked about riding the wave. This wave of prediction markets is basically unstoppable at this point. I saw this news the other day. I don't know if I put it in the snapshot on any of the days, but I'm just going to search for it here. This, at least in part, must be why the wave is so strong. There was this news announced. Where are we? Okay, I need to research this. Here we go. So the first thing that happened was that I think it was the CFTC came out the other day, giving a message to the states who are trying to regulate prediction markets, saying we'll see you in court. I basically, I think the CFTC, who have been kind of got this new innovation force. Remember, we mentioned it the other day on the show. There's some people from crypto, some people from prediction markets. It feels like the administration or the CFTC is kind of blessing prediction markets anyway because of that thing specifically. And I guess what it means is, remember, there were these cases where different states are trying to say to prediction markets, no, hang on a sec, this looks a little bit like sports gambling. Maybe you shouldn't be able to do that. It looks like people want to push, the administration wants to allow it to happen. And just a kind of adjacent piece of news to that, which I'm sure is supportive, is the news that, how can I not find it now? I don't know what's going on. But anyways, this news was the main thing, where the Trump administration is throwing its support behind the prediction market operators Kalshi and Polymarket in a critical legal battle between the growing prediction market industry and states that wish to ban these platforms. As I said, the recent appointee chairman of the CFTC could have enormous implications for how sports betting is regulated in the country. It looks like they're trying to make it friendly. And I thought I read somewhere, although someone can maybe tell me in the comments if I'm wrong. It's not coming up in Google now, but I thought Trump, Truth Social, or one of the media entities, were also going to be launching prediction markets. I don't know if that is accurate or not, but I thought that makes a hell of a lot of sense then. Oh, here we go. 28th of October. So it's kind of old news, maybe. Trump media to enter prediction market business. That was announced a few months ago. So I guess they can't be, they can't really be illegal, or, I don't think they'll want them to be under too much scrutiny, because the Trump family will be, and the companies associated with them are going to be launching their own. So, did you know about that, Ledge? What do you think of that? Any specific thoughts?
My instinctive thought was, with all of the things that the Trump family now gets involved in, the pendulum is massively, massively swinging one way with all of the structures that they're building so that they can also have their own businesses running or backing their own businesses, whatever is in their interest. How that will swing back after the next presidential election if it's not a Republican president at the head of the US.
I could not agree with you more. Like, the pendulum swing back in the other direction is going to be horrific, absolutely horrific, in my opinion. The reason why is because the environment in the United States has already become so toxic internally. This is an internal toxicity between the two parties, and I think there has already become an established culture of going after either people in the previous administration or the leaders themselves. That culture has kind of been established, and I think that we're going to see a big backlash against whether it's just crypto, whether it's prediction markets, or just any business that the Trump administration and the family have been involved in, you can see how the other side are going to want to take a sledgehammer to that, I think. So I think we've got to be cautious of that. I think it's the right thing to point out there. But in the short term, then, Ledge, what do you think? You just gamble away. Like, it's the hyper gambling thesis, right? Everything is going to be tradable. Everything is going to be able to invest in, gamble in, put your money down on. Is that just what we're going to be in, at least in this, the years of this administration?
I mean, it absolutely sounds like it, right? Just think about what we just said. There is an ETF that allows you to gamble on an outcome of something. I mean, obviously, ETFs can do a lot of things, but this feels feels a bit wild.
Yeah, I think that's right. Just for a bit of context, I don't think this is the first ETF of this kind. There is another one that's already around, or another one that's been announced. So, not the first one, but clearly instructive of the direction that the world is going in, with desire to participate in these types of investable products. Okay, so that is that side. Maybe I just wanted to have a quick portfolio question here, Legendary, because I think a lot of people, maybe rightly, come to the show and generally are just on crypto Twitter and want to be in the investing world in order to make money, right? We're always talking about how to make money as part of the name of the show. We're trying to find ways to make some or a lot of money. However, we've been in capital preservation mode for a long time. And so from the summer onwards, we were taking risk off. I thought that was the appropriate thing to do. I think the market has proven that right. I wanted to flip the question in a way, rather than asking how you're trying to make money now, just how are you trying to preserve the money now? Like, is there anything that you are actively doing? Is there anything that you are trying not to do? What is your strategy to preserve the money, with the question being focused in that direction?
Ooh, I like this flippening of the question. What am I doing to preserve money right now? One thing I am not changing.
How many holidays have you cancelled?
None.
None. Okay, so things can't be that bad.
Yeah, things can't be that bad. Not at all. The capex, if you want to call it like that, is still up high.
Legendary is Nvidia still spending, creating circular economies with all the other travel agents.
I mean, at some point, I do need to start to look into some of the subscriptions that I have, because I think it got a bit out of hand in terms of the AI side. I maybe have a bit too much going on there, and I can cut down on that.
Okay, but you're not actually doing that yet. So
no. So what am I actually doing to give you?
What are you doing on the portfolio side?
So I strongly believe that timing the market is better than timing the market for my MSCI World stuff. I was thinking about, do I want to take some profits? Do I want to move things around? But ultimately, it just came back to the thing. I don't know what's going to happen in the future. Nobody does. This is a long-term investment. So I'm just going to keep adding the same amount of money in this monthly savings plan for my MSCI World. The only change that I'm making here is, if the market really crashes, I actually can set that up, and I did automatically in my broker, that I can double the amount. Like, if S&P is, or MSCI All Country World is down, say more than, I don't know, 5%, 10%, whatever you want to pick in a specific time frame, then you can double the savings plan for that time being. So this is the one thing that I strongly will keep. Further increase gold exposure by, for me, rotating out of the US dollar. I looked at my stablecoin split, and there's still too much USDC in there that does not need to be there. And I frankly think, for me right now, it's worth more to be in euro and gold than to keep the USDC to speculate on whatever liquidity provision. Like, take the snapshot as an example. You said there's no incentives on Polymarket for liquidity providers. Yeah, the thinking could be, if I provide liquidity there right now, I might farm a potential poly airdrop that might or might not happen. Or if it happens, I don't know what the criteria for that will be like. And I'm not willing to engage on that. I'd much rather move the speculative USDC reserve into euro and gold and increase the gold stack by doing that as a one-time purchase. That is the second thing. And the third thing is having more discipline, not on the holiday side of things, but on the opening the checkbook for the things that I find cool right now. I don't need to be investing in any AI companies, in any, and then I'm getting a lot of, ever since I am doing more AI content on X, I'm getting a ton of inbound. And I don't think that I should be investing in any of these things because it's unimaginable how fast the AI acceleration will be, and the thing you're investing in will be a native feature that Claude or OpenAI or whomever can do tomorrow, in a week, or in a couple of months. So checkbook is closed there.
That is good advice. Let me go through some of them and share some of my perspective. So on that last point, I kind of agree with you, and also would just offer an alternative view. I definitely agree that I think I only wrote one check in 2025. I can't remember 100%. And obviously these are long-term things, so you expect that to come to fruition much later. But in general, slowing down at the top of a market is good, because everyone knows it's a great market to raise in, and therefore they're tapping the money when it's there and people are excited. And so I generally think, well, from a timing perspective, that would be a bad time to do it, especially given that you're talking about AI opportunities. And maybe the crypto market is down, but Nvidia is still at all-time highs. The stock market is still 1% off all-time highs. So as far as everyone else is concerned, they were just talking yesterday or overnight about how the latest OpenAI raise, let me just see what the number was, 10 hours ago, OpenAI funding on track to top $100 billion in the latest round. So there is no shortage of excitement and demand for some of this OpenAI stuff. Although I did also read maybe SoftBank were not coming in for the amount they said, or Nvidia said they're not. Nvidia definitely said they're not going to do the full amount that they said they were going to do. But either way, clearly we're at a very, very high amount of excitement and froth for AI investment. It's got a lot of expectation, a lot to live up to. And yeah, the further you go down the curve here, who knows? Who knows if the market turns on Nvidia or AI in general? That'll be a problem, at least in the short to medium term. And as you say, so many people, everything's moving so fast that the risk reward, I think, is the way to put it, would be really, really bad going into a company who you don't know. The caveat, which I said that I think there would be one, is if you do know the person and you know them well and you're betting on the human rather than the idea, then I think that might be something you want to entertain, even though the timing of the market is still bad. So you want to weigh those two things. I think betting on the human rather than the idea is a general learning that I've taken quite well. On your other things, I don't know if you want to come back on that at all, Ledge, or do you want me to go into the next thing?
Yeah, betting on the human it is. I think when we had Austin on the show from Newco, he said that, I think it was the Solana Foundation who basically just invested on the Snap decision, that they like the team, the X-Doodles team building that, and they're confident to write the check just because of that reason alone.
Yeah, betting on the humans is important. Shout out to Matthew in the comments saying Anthropic's at $390 billion for its raise as well. Absolutely colossal demand for the stuff, proving the point. Also, so talking about gold, I have definitely upped my exposure to gold as well. But thinking about trying to not lose money, because the position has become quite significant, what I've decided to do is actually go short gold at the same time, because just as a balancing counterweight factor, like if gold was to move down 10-15%, which I think it literally did the other day, right? Well, it's already down 10% from the highs at 5,500. I think it went down to as low as, what did it do? It went low to maybe 48 the other day. I can't remember 100%. But it has been a bit volatile. And so just to protect myself a little bit, I've gone short there. And, if it goes up, again, so remember, this is the exact thinking I articulated for my ETH short. I think there's certain times in the market where the risk reward is nice. And if you're fully exposed to a particular asset, the risk reward actually looks pretty good there. Like if you're exposed to the stock market and you've just decided, Legendary, for example, yourself, you want to stay exposed to the stock market. Well, if you've got so much big exposure, I think at certain points in time, when you know what your liquidation price would be, you'd be like, okay, well, if I short this amount, then even if I did get liquidated up here at this particular price, I'm still up because you're kind of sacrificing a certain amount now in order to make more if it goes up. And so it does make sense at certain points in time. What I don't think necessarily is the case is if you've already sold a load of Bitcoin, for example, you've reduced your position, so you don't have that much now, and then you go short Bitcoin here because in order to kind of protect yourself. I think the majority of that move has actually already happened. Bitcoin is, 60, I don't know, way more than that now. I don't know. It's just humongously off its all-time high at the moment, right?
Yeah.
50% maybe, 50, 60%. And so you've already missed like the meat of that move. It doesn't feel as good risk reward as, the stock market at all-time high. And you look, full disclosure, yeah, you can get wrecked. Maybe these guys are going to pump the stock market through 7,000, through 7,200 or whatever. And maybe eventually it's going to go there anyway, right? But you're just thinking through how to protect yourself in different scenarios. So that's my thinking in terms of protecting, still holding it. Sorry, go on.
That was exactly the last thing is that you said, my thinking on why I'm just keeping the monthly MSCI savings plan as is. Long term, it's going to go up if they're going to pump it in this second half of the administration. I know could be, could not be, but I just don't think it's going to matter over the next 10 years because we're going to be way, way higher than we are now. Or AGI is going to be here, stock's not going to matter anymore, and then everything else doesn't matter either way, and we'll have a complete different reality and society to figure out and live within.
Yeah, I don't know about that one, but yeah, so it's just a question of timeframes, isn't it? So we said we wanted to discuss how to protect a little bit, and then maybe the final thing for me, still holding healthy amount of stable coins, and that's probably the main thing. I've got a few stocks as well. Got a few oil stocks. Got a few energy, rare earth type of things where I think on the commodity side might be better, maybe less volatile than the other stuff. Although those have run up a lot as well. So that's what we're thinking in terms of protection, guys. I hope that was an interesting conversation. Obviously, everyone always wants to know what to buy, and I think sometimes you might just decide that the best position is cash if you're thinking on a 3 to 6 month horizon. I'd still say that's probably a decent position to have at the moment. Okay, so that's that. Hope that's helpful. Let's get into the headlines, Ledge. We've said there's a lot of uncertainty, a lot of caution around at the moment. I'm very curious to hear what you have to say and update us on what is potentially taking place in Iran.
Yes, absolutely. Maybe just leading quickly with the market before I get into the Iran headline. The thing is that if you just look at the headline numbers, you'll see the S&P is up over the day. Gold is flat, is down 5 basis points. Silver's up 0.5%. Yes, crypto's down a bit, but it doesn't look like a lot is happening on the surface, but it definitely is. And there's this interesting CNN article that goes straight into the Iran situation that is saying that the US military is prepared to strike Iran as early as this weekend, though President Donald Trump has yet to make a final decision on whether he'll authorize such actions. Sources familiar with that matter have told CNN. And there's multiple articles reporting that same narrative, including the BBC, that are quoting, well, not directly quoting, but saying that various insiders who are familiar with the White House with Donald Trump's thinking, that he is spending a lot of time thinking about this. Also, if you look at Trump's communication plus the White House press secretary, they're very clearly saying that it would be in Iran's best interest to strike a deal with the US rather quickly. And where this is reflecting the strongest right now is on Polymarket, where you have this, it's a colossal market. There's 300 million betting on when the US is going to strike Iran by. And we can see that, this weekend doesn't necessarily have the highest odds. Today is what, Feb 19th. So say we pick Saturday, which has 1.8 mil in vol, which is a 15% chance, was as high as 20 something. It is not necessarily the market that I would reference for that, but I would scroll down further to the end of March, mid-March, end of March thinkings, and especially the end of March one, which is one that also has seen significant volume, has seen 11 mil in volume, is now, let's look at this over the last week. So last week ago, this has been a 30% chance that this is going to happen. And now this doubled up essentially overnight to a 60% chance that we are going to see a US strike in Iran by the end of March. And to me, the impressive, I don't know if impressive is the right word, the noteworthy, let's put it like that, the noteworthy part of that is how much volume this prediction market has, because this is a very, very significant number for Polymarket to have 300 million. I know it's a ton of dates, but those are all the individual dates. End of March, end of Feb has 27 million volume. We are talking about quite active betting, predicting activity on this market and submarket specifically.
I don't know about this one. I mean, I think it's incredibly interesting from an informational perspective. I had not seen before such a kind of date by date option for military action. I don't know if I've been blind to this before. I know that there's been things to do with conflict, but this one seems even more detailed and even more like it's captured people's imagination as well, which I guess is the point of it, right? But it feels very uncomfortable. And you've made this point before a lot about prediction markets, right? That
Yeah.
you have very strange incentives if you put up certain things and are allowed to bet on it. And I would suspect, well, I don't know, but there's something very gross about betting. And then I guess if you put a lot of money down, hoping that a strike takes place on February the 23rd, for example. And by the way, not to be political at all, it doesn't matter whether it's Iran or whether it's Greenland or whether, like, you can insert whatever name of country that should be there, but it's definitely something uncomfortable about the idea that you're going to put $1,000 down on February the 25th, and you're going to keep checking your bet, keep looking online to be like, oh, I hope they now strike that country, whoever it is. Yeah, what do you think?
I very much agree with that. I also had this post more than a year ago when they started with these Middle Eastern markets, which back in the time went viral and led to this note on top being added that says why they're using these markets for. I 100% agree. And I think it gets even worse with markets like this one, that it, to me, is reading like a sport bet. And the market is, will US or Israel strike Iran first? It's like asking, will Manchester or, help me, insert another football team, will score the first goal in a match. It reads exactly that way, and that is disgusting.
Yeah,
And
it's
also
like
really justifies, sorry, this explanation. We're capturing the wisdom, blah blah blah, gut wrenching times. We realized the prediction markets could give them answers they needed in ways TV news and X could not. I don't think that it's helpful if you are living in Iran or wherever, whatever market, conflict market it is, to have the knowledge whether people think, hey, who's gonna nuke us, who's gonna strike us first. I don't know about that.
yeah, I don't know. I don't know. Maybe above our pay grades. That is interesting that they do have that note there at the top of the website. If you're not watching in, you can see it here. It says, "Note on Middle East markets: the promise of prediction markets is to harness the wisdom of the crowd to create accurate, unbiased forecast for the most important events to society. That ability is particularly invaluable in gut-wrenching times like today. After discussing with those directly affected by the attacks who had dozens of questions, we realized that prediction markets could give them the answers they needed in ways TV news and X could not. Conflict set of competing incentives here, I guess, and different stakeholders who might want different things. It is what it is, though. So it's definitely something uncomfortable about it, definitely something gross about it. It is what it is. And so from the market perspective, then, Legendary, whether or not we are trading in it ourselves, I mean, we touched on it a little bit yesterday, but the perspective here is to just see how it goes. You're not getting too involved in the market. Otherwise, is that still the case? I think maybe gold ticked up. Well, it ticked up a little bit when it first started circulating a couple of days ago. But is there anything else you're thinking about as this seems to be reaching some kind of crescendo?
It's probably gonna. I think I'm too uneducated to give a more sophisticated answer other than saying that, as horrible as it might sound. How do I phrase this? We've seen obviously what happened in Ukraine with the Russia invasion, and you had the invasion dip, and then the market recovered. And we've seen that happening in the Middle East over and over. We've generally seen that you have an invasion dip, and then you have assets. Typically, there was this, who had this analysis, what was it, Goldman? That's saying that BTC crypto assets recover first from an invasion dip, then other assets. So I don't think that I will let whatever happens between US and Iran in any way affect my portfolio, make that part of my portfolio decisions or investment decisions.
Okay. I think that is fair. I tend to agree. I do think that if we have some kind of meaningful dip, which I think might be around the corner, although I don't know for sure, some people have been talking about like a very, very extended bear market. I just don't see that happening personally, purely based on instinct, purely just kind of thinking out loud. I don't think with the way that the economy is designed at the moment, I don't think with the way with the people who are at the helm, I don't think there will be an extended period of downtime. I think there could be some downtime, and then they're going to need to get it moving again towards the end of the administrative cycle. So that would be my view at the moment. So just expect volatility. I think volatility is the new thing to be expected. Internalize it, accept it. It's here, and yeah, buckle up, because I think that's always going to be a part of it at the moment. So, anything else, Ledge?
No, fair point. Agreeing with you there.
Okay, let's get into. So we've done a bit of macro. We've done some portfolio chat. Let's get into more the crypto side. This was big news yesterday that Coinbase's L2 base has decided to leave Optimism. Optimism being the creators of the Superchain, which is kind of an ecosystem of L2s that were all supporting Ethereum, and Optimism were at the head of it. And Base has decided to leave that ecosystem in order to create their own. They said in some correspondence to accelerate innovation, scaling, and security. Base is evolving its foundational software by moving it to a unified Base operated stack. Once we complete this transition, node operators will need to follow releases from Base instead of Optimism's releases. This has obviously affected, this is obviously important because it's affected Optimism in a big way. The token is down almost 25% on the day because Base was its biggest fee generating chain, and they used to provide a certain proportion of those fees back to Optimism. That's how the Superchain ecosystem worked. If you were a Superchain chain, some of your fees would go back to Optimism. So this is like losing your star player, your star piece of infrastructure, and they're going to go it along. In many ways, it makes a lot of sense for Base because they are the star player, they are the star infrastructure, they're making so much of the money. why give away anything else to anyone else if you don't have to? And so I think this was maybe inevitable, although there was this perspective before that wouldn't it be nice if there was some kind of Ethereum alliance and everyone was incentivized in the right way? I think everyone has already come to the conclusion that is not the case in the Ethereum ecosystem. No one is paying their tax back to mainnet. That's why ETH itself is struggling so much, whereas all this activity went elsewhere. All the L2s themselves were capturing all the money and all the fees, but nothing was going back, or hardly anything was going back to the main chain. So the incentives were not designed correctly here anyway. It looks like these L2s will continue to be able to do whatever they want to do. And if you are very successful as an L2, you'll be able to keep all of those fees for yourself. A couple of a bit of commentary from around the space. Serpin, from the founder of Ethos, said base leaving optimism is a stark reminder that in crypto there are simply no moats. And because of this, everyone hates to depend on each other. It is so contrarian to Web 2, one of the most confusing parts of building here, to be honest. It must feel very challenging, where basically if you become successful in Web 3, you have the option or the ability to just spin off and start doing your own thing entirely. And that completely rugs the people who provide it for you. So just to be clear, we've given one reading of history, I think, which is why give money to someone else if you don't need to? The official perspective from Base was to talk about accelerating innovation, scaling, and security. They don't talk about fees, right? They don't talk about that more economic side. That's just my reading of it, which I think was pretty obvious to see. And maybe finally, something that might be interesting to people. Some people have just suggested that this indicates there will be a base token this year. People think that that would be one of the L2s whose token would be worth something, would be worth more. It certainly would have more utility as its own token powering a network rather than just a kind of a token, with ETH being the main gas token. So that's my thought there. Ledge, curious what you think on Base's decision to leave Optimism and go it alone. And I see Phunky with his hand raised. We'll come to him straight after as well.
Yeah, I'll keep it sweet and short. This is a game of economic incentives. So if it makes sense to build your own stack and not be wanting to do that with OP stack anymore, that is the decision to make. The thing that I would want to look more into is also what the thing that someone is alluding to in the comments on the SERP's post, saying that Base was getting tokens, Optimism tokens for that over 6 years for using the stack and sharing sequencer revenue. Again, this is just a comment. I cannot fact check it live as we speak, but that would also be interesting to see what is happening there, what is happening with these tokens and incentives. Are they running out? Did they run out, etc.? But just purely on an economic level, it's a decision that I understand and that makes sense. But I'm curious to hear what Phunky has to say on this.
Phunky, bring it in. What do you think? Welcome to the stage, man.
GM guys, no, this is really interesting because I was just at the Optimism Scaling Summit on Tuesday when I first got to ETHDenver. And so they're making this big push for OP Enterprise, where basically because the OP stack is so well known and easy to use that anybody can just come and kind of deploy their own blockchain, or they can have it managed for them by Optimism. There was a big announcement that EtherFi, for instance, just moved everything over to the OP mainnet, and they'll be running all their stuff through there. But to your point, DeFi Ignis had a post. I think it's 13.15 ETH per day is what Base was producing. And all of the other superchains combined was 0.84 ETH. So it is devastating for Optimism in terms of just the amount of revenue that they were getting from Coinbase. The real kicker, however, is that OP Labs has very famously said it's MIT licensed software that's all open source. So Base wouldn't even have to do any kind of heavy lifting. They literally could just fork the code they're already running on and just start making Base repos. It's not like they would have to have some massive engineering lift because the chain's already successfully running. So very interesting, especially with everything that's happening at ETHDenver, which if you guys didn't see the chat yesterday, I showed you what ETHDenver looks like this year. It's like an eighth of the size of the previous years. And yeah, it's
interesting
vibe here on the ground.
I wanted to ask you one follow-up question on that, Phunky, because I've seen various people on the public-facing timeline suggest that ETHDenver is going great. Curious for your, follow-up thoughts on your valuation that it looks about the nature of the people. What's the atmosphere like? What's the spirit like? Any further context you can provide?
Yeah, I think I would say there's two camps, right? Because ETHDenver is going to draw an everybody kind of crowd from crypto. And there are the people that are focused on sort of regulatory regime change and legislation and Clarity Act and all the things that are positive that are coming for the infrastructure of the industry. They're very upbeat, right? No one really too focused on prices for people who have a long-term time horizon. But the general consensus among just everybody, people were shocked at how small it had become. Like, I mean, it is really, really small. It's my fourth year in a row. And like I said, it's an eighth of the size. It's in a brand new building. And there's probably 60% or so fewer side events. Normally, there were so many side events at ETHDenver, you could never get to all of them. And I'm easily bouncing between one to the next, stay for an hour, meet some people, go to something else. So it's, again, I think for the average degen, they're probably more psychologically affected by the conditions of the prices of the tokens in the market. But for people who are long-term builders, no, I think people are still very positive and upbeat about where this is all going.
Interesting. Really appreciate the additional thoughts. I do think that's a huge problem. Like, it's a humongous problem that the numbers have dwindled to such an extent. Sure, maybe some long-term builders are there, but I think not only have we lost participants, retail and other interested parties, but also builders as well. So maybe some core ones are still around, but you need to keep growing the ecosystem, right, for it to stay healthy. So I think that's a humongous thing. And I love looking at the more social metrics. Obviously, we get great data around the show, for example, on how interest on speculation and interest in markets is trending. I think ETHDenver is a perfect data point as well to take. So very, very well, I find it illuminating that is how it is. Appreciate the takes, Phunky. Getting into the final headline for the day, we have a bit of an AI one now. So we've had macro, we've had crypto, and now we're going AI. Ledge, what do we need to know about this OpenAI news and smart contract evaluation? What's going on here? What do we need to know?
Yeah, very happy to talk about this one specifically. It is OpenAI introducing what they call EVM Bench, which is a benchmarking tool for LLMs to see how well they are at working with smart contracts. The reasoning behind that is that smart contracts routinely secure 100 plus billion in open source crypto assets. And we've obviously seen that if people use Claude Code or whatever AI agent to deploy live smart contracts, and there's money involved and there is an issue to exploit, it will be exploited and money will be lost. Hence, OpenAI partnered up with Paradigm to introduce exactly this benchmark, EVM Bench, which is looking at the capabilities of AI agents to detect, patch, and exploit high severity smart contract vulnerabilities. The way it works is that there's 3 modes in there. The detect one, where it is looking at vulnerabilities and associated audit rewards. The patch one, can these AI agents patch the bugs that or the threats that were found while keeping the intended functionality of the smart contracts. And exploit, just to stress test the context, so to speak. Can they exploit a smart contract that someone has written? And then obviously, if they exploit it in the sandbox, identify why it's been exploited, how can it be patched, how can it be fixed, and then continue on this testing loop. What they're saying that Codex 5.3, their frontier coding model, is achieving a score 72.2%. 6 months ago, GPT-5 achieved a score of half that at 32%. So the models are improving. Their own models are improving as well. However, there are some important limitations to that. And the big limitation here is that this is testing against basically human trained data, what human auditors did find with smart contracts. If the agent identifies additional issues, they do not currently have a reliable way to determine whether they represent true vulnerabilities that humans missed or just false positives. So even if you have an agent, why this matters, if you have an agent that is scoring high, either now in the future, in this benchmark, it does not mean that you can now just take said agent, let it write the smart contract, and be 100% confident that nothing can go wrong on that side of things, because this is not what the EVM bench can guarantee you. And obviously it matters, because once a smart contract is live, you will have a ton of people, once there's money in there, who will try to see if there is a way to exploit it, and it lives on chain. And you will probably be taking more time to, you won't make it in time to fix it or to take the assets off. It's someone's already running an attack against you, is finding a vulnerability, that money will be gone, and that exploit will be exploited.
Interesting. Okay, so one of my questions here, Ledge, is just before we close out. I'm very disturbed by the news from Moonwell yesterday, for example, where it said that there was a code, a Claude code based issue, and therefore there was the protocol got hacked. They were using Claude to do the code, and it didn't do it properly, or something like that. And on the one hand, my initial reaction was, gosh, that's terrible. I would never touch anything code related. And then you pointed out correctly, when I realized the issue with my point around it in the Telegram this morning, when I said, I will never knowingly use a financial protocol that is having code written by AI. And I guess the issue that I realized was, I can try my best, but no one's going to tell you. The thing is, it's going to become so ubiquitous that people are going to use these tools all the time, because people are lazy, and because generally these things are going to be really good. I just think that there should be very, very strong guardrails around the use for financial protocols, or when there's very sensitive data. You should be making way high the standard of the guarantee that you're making to your customer needs to be way higher when you are dealing with financial information, confidential, sensitive information. You need to be saying that, no, a human will look at this. Of course they're supposed to, but clearly people will be very tempted these days, I think, to just let Claude do it. And I think that is something that people should really fight back against, and say, it doesn't matter how good that it appears, that the code appears to be. You actually 100% need someone who is going to take responsibility for it at all times to sign off on all this stuff. Ledge, what do you think before we close out?
Yeah, and the issue with that is, okay, now continue on this line of thought. You have a smart contract for, say, I don't know, I don't want to name a specific protocol, specific DeFi, any DeFi protocol, and they're building a new version. They're building V4 of that DeFi protocol, and then they're getting a human auditor to audit it. Who tells you that that human auditor is not also using EVM Bench to maybe audit that smart contract? And you hired a human, that human then uses a Claude code, and that human tells you, cool, we just audited that and it seems fine. And there might be an insurance, and there might be that will where you will have, if you're the DeFi protocol and you've been given a good audit, and it turns out it was done sloppily only with AI, there might be an insurance. But with the amount of money that there is in DeFi, and with protocols going in the billions, if not tens of billions, you won't find an insurance company who's going to insure you exactly that, given the nature of smart contracts, not to this unlimited cap, not the premium that would be reasonable for anyone to pay. So yeah, I guess it's, in theory, I agree with your thought that you would want humans to check on that for the time being. So it's going to change in a couple of months. But I just don't think that there's any way to enforce or guarantee it at this point. So maybe the best strategy is either you trust protocols who have existed pre-vibe coding. You trust Aave because it was done in a pre-vibe coding time, and if they upgrade to a version that you're not comfy with, you maybe try to keep your money in the legacy pools. And then you are more skeptical or critical with any new deployments if you involve a lot of money being put into them, until we get to a point where smart contracts are not a challenge anymore for for AI agents, and you can then say that you are actually in the inverse position, that you'd rather want an AI agent written smart contract than a human written one, because humans, like even the top 0.1%, are worse at doing that than AI agents are. That's the extension of my thinking here.
Yeah, I think in the end, people, like, the way that you do it is you have to make it that the people auditing, or the final person, is representing or warranting legally that they are going to be reviewing it as a person. So then if they don't do it, then you sue them on professional indemnity insurance, because someone's got to take responsibility, right? You can't just have agents pointing the fingers at other agents. There's got to be someone taking responsibility. But,
sure, but that insurance will have a liability cap, and if it's a big protocol, that insurance is not probably going to pay if 5 bill get lost or whatever.
Yeah, but that's the same as now as well. So
yeah, exactly.
Okay. Good stuff. Right. Good conversation as always. Just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern Time, live on X Video, YouTube, and you can catch us on Apple, Spotify, and TikTok as well. We'll be back same time, same place tomorrow. Have a wonderful day. See you tomorrow. Bye-bye.